Mark Matthew joins us now. Let's take a conversation forward. Mark, good morning. Thank you for joining us. Mark, there seems to be a change of heart or a tactical positioning change, but suddenly India is a large recipient of FI flows. Earlier this year, the challenge was that lot of FIs had migrated from India to China. Looks like they are making a comeback to India.
I guess so. I guess that if I had to identify a reason for the fund flows, it would be that the foreign investors are becoming lukewarm on China. They played the recovery, and now they're thinking that the recovery is done, and so they're looking for other places to invest in. I might add that Japan has also been a recipient of a lot of foreign interest over the last month or so, and it's a similar story.
Reward ratio for equities now that we've seen a sizable comeback in across the board equity as an asset class?
I didn't know there was a question. I'm sorry.
No, my question is, where do you see the risk reward ratio for equity as an asset class, considering that we've seen a sizable comeback?
I think it's fine. I think that foreigners are underinvested in India, and it has double-digit earnings growth, and it's had a year and a half to digest higher valuations, so it is not expensive anymore. And if you think that the Federal Reserve has finished raising rates, whereas the European Central Bank has probably got some more to go, and that means the dollar should be softer, then I think it all adds up to a positive backdrop.
Mark, so are we in for rest of the year? Are we in for more gains for equities in general and India in particular, or this is as good as it gets for 2023?
We think the market will go higher through the summer and maybe a little correction in the third quarter as people fret about the possibility of a recession, which is not immaterial. But if there is a recession, it'll be one of those recessions that you hardly even feel. In other words, maybe a couple of quarters of a very mild contraction. But if there's still about 3 or 4% inflation in the United States, then you'll get earnings growth despite a slight GDP deceleration for the S&P. And so anyway, going into the end of the year, we'd also look for a rally. I would say one thing. If you look at the last 10 rate hike cycles, going back to 1974, and what did the S&P do after the last rate hike of those rate hike cycles? Then actually, on average, it was down a tiny bit over the next month. But then it was up a little bit over the next 3 months. It was up about 5% over the next 6 months on average, and it was up 14% on average 12 months out. So at least historically, the evidence suggests that the end of a interest rate hiking cycle is a positive thing for the stock market.
Mark, that entire move money out of India, put it into China, India versus China trade, you think has come to a halt? I mean, because both the markets can coexist and do well, right?
Yes, they can, especially because, to my mind, the most important ingredient is the domestic money. And in both countries, it's much bigger than the foreign money that could be invested in them. So I think they can coexist positively in terms of going up at the same time. But to my earlier point, I would say that the one market in Asia that does seem to be attracting the most attention is Japan. And it is a much larger market, of course, than India. It's the third largest market in the world, so it's very deep and liquid, and it's a developed market. And Warren Buffett announced last month that he was increasing his stake in the 5 big trading companies there, and he visited the country as well, which is quite rare for him to go overseas. So I think India can do just fine, will do just fine, but foreigners seem to be more interested in Japan, looking for alternatives to China at the moment.
Mark, hi, morning. What is the outlook then in terms of the approach? Is it time then to buy equities, you think, at the current juncture from a long-term perspective?
Yes, it is. Certainly, if you don't own any, because they do go up over time. And as for the trading aspect of it, I wouldn't venture a guess because there's so many different things that happen that can cause markets to go up and down on a weekly basis. But what is kind of interesting when you think about it is if you could rewind the clock and put yourself back at the beginning of the year and know all of the crazy things that have happened between then and now, like the Federal Reserve kept raising rates a lot, and you had a Credit Suisse in Switzerland, and Silicon Valley Bank, and First Republic Bank in the United States, and yet the S&P is up 9%, including dividends so far this year. So I never feel that trading the market based on news flow is a recipe to make money. And just stay invested, and over time, if you're invested in good quality companies, they will go up. Most of the companies, at least by market cap, that comprise the Nifty index are good quality companies.
Mark, when it comes to India, one is seeing a tactical shift. While people continue to be bullish on financials and especially banks, but more money is now migrating to manufacturing and more inward looking because there isn't much investment here. It's more domestic manufacturing which is getting a fillip. Do you also believe that people are right about this trade?
I don't know if I can comment on that trend. I don't know why it would be happening. It certainly makes sense to me that manufacturing as a percent of the economy grows in India. We can see the infrastructure that's been put in place to accommodate industry. And any other country in the world where you've had so much investment in ports and airports and roads and electricity, et cetera, a natural corollary of that is in growth in the industrial sector. And Tim Cook visiting the country and saying he has a positive outlook on it as well. It all fits. But is that the reason why people have been buying industrial stocks, manufacturing stocks recently? I don't know.
Mark, so if you have to park your capital or your money in just two asset classes, one long and one short for rest of the year or for next 12 months, where will you go short and where will you go long?
I can't think of many places where I see prices really deserving to go down a lot, because the ones that were extremely overvalued, say a year ago, they deflated quite significantly. So I think we're not recommending something like a cryptocurrency or I don't know what, but anyway, no, I don't see anything to be very short against right now. And broadly speaking, I think financial assets will continue their road higher, especially given that interest rates have peaked in the United States.
Mark, I can understand why gold is going higher, but what I cannot understand, and I really want to understand, and please help me understand, is why Bitcoin is going up.
I don't understand either, but I would just say that Bitcoin tends to be viewed as a alternative currency, isn't it? And so if you feel the dollar is going to continue to go down, then you should think that Bitcoin is the inverse of that. I don't really know what else to say apart from that. It's considered a bit like a digital gold, if you will. So people buy it when they think the dollar is going to go down.
We all are trying to understand, aren't we? We all are trying to understand that what is the mystery why Bitcoin and crypto is going higher. Warren Buffett at the Berkshire AGM did indicate that US dollar is unlikely to lose its status of a reserve currency because there are no alternatives. If that is the underlying thought that the US dollar is unlikely to lose its status as a reverse currency, what implications do you think it will have on the dollar index and then on emerging market currencies?
Well, the dollar has been the world's reserve currency for many decades, and yet during those decades, it's not been a one-way street. It's gone up and down like a yo-yo. So I don't think the reserve currency status of the dollar by definition determines where it's going to go. And So there are two functions of a reserve currency primarily. One is a store of value, one is a medium of exchange. And as a medium of exchange, one could say that it's probably peaked and going to go down because more and more countries are saying they're just going to trade amongst themselves. But ultimately, I don't think Brazilian companies, for example, want to keep a lot of renminbi. What are they going to do with that money? They probably will end up putting it in dollars. And as a store of value, well, there just really aren't enough alternatives, which probably explains why gold is going up, because there's no yield in Japanese bonds. There's China's currency is a controlled currency, and the bond market there's not much transparency, so you don't really know what you're holding. I don't think anybody has a great deal of interest in owning lots and lots of euros. And then you've got some smaller currencies that are quite decent, like the Australian dollar or the Canadian dollar, but you can't own loads and loads of them. So anyway, I don't want to ramble, but I do think probably as a medium of exchange, the dollar's importance is going to gradually decline, but don't think that will be a big factor in determining where the dollar goes. The most important factor is where the Americans are in the interest rate cycle versus the Europeans. And there, I do think there is reason for the dollar to go down, because Americans aren't going to raise any rates more, and the Europeans will probably raise rates by another 75 basis points from here.
Really appreciate it. I'm so glad you could join us.